So very interesting week again this week. So we've got lots to talk about today. So especially with regard to the FOMC announcement update. So the US Federal Reserve ends 2012 with a bang. So we'll be talking about that certainly this morning, what effect that had on the markets, and we're doing some live review and market analysis. So if it's your first time on one of these sessions, today we'll be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. So the live session will cover end of week summary of gold, silver, commodity currencies. We'll look at the top trades of the week. We'll go through some live market commentary and technical analysis, and we'll also look at the week ahead, so key events looking forward, and of course answer any of your questions. Okay, so the real headline news this week was the US Federal Reserve ends 2012 with additional QE. So they delivered a bit of a Christmas present, if you like, for investors, promising QE4 at the final FOMC meeting just on Wednesday. They confirmed that the Federal Reserve will begin a new round of quantitative easing in January 2013, spending $45 billion per month to buy US government debt with no limit on the program's total purchases. So with that news, gold price did jump to a two-week high, 1,723 an ounce, before we saw a big drop back down to 1,700 at the start of the Asian trading session, which we'll talk through very shortly, and the reasons for this. So there's actually no deal at the moment between the US President Barack Obama and Republicans in Congress on the pending fiscal cliff situation. This is also combined with low trading volume from institutions at this time of year, and so it's really put on hold gold for the time being. So we'll go through that. So obviously the big question is, what effect will QE4 have on the gold price in 2013? So on this, guys, you probably noticed this time of year we are going to start seeing volumes drop down. In fact, it's starting to happen after the Federal Reserve announcement, pretty much from yesterday afternoon onwards, and today we are going to see volumes start to fall quite considerably, especially moving into next week and of course the week during Christmas. So we'll be talking about that as well. Okay, so just a quick little bit about myself and Nick at the Gold and Silver Club, for those of you who are new to our webinars. So I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialise in teaching people how to trade, making money from the biggest financial markets in the world. So that's Forex, gold, silver and oil is what I specialise in. I've trained hundreds of individuals to become independent traders, successfully manage their own investment portfolio, and I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. I'm also a regular contributor to a number of financial publications and speak at numerous trading seminars and workshops. So that's just a little bit about myself. Nick was the co-founder of the Gold and Silver Club. He's a professional trader, investment analyst and speaker. And he began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, he spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. So it's through his first-hand relationship with some of the world's most successful traders, he's discovered the formula, mindset and tools, all very important for trading, to give you the edge to make money in any economy, whether the market's going sideways, up or down, and also regularly writes for a number of global business and financial publications, and also we've both appeared on television frequently on financial news. So this is us actually on, recently actually on Ducoscopy. This was Swiss television, just giving our opinions on the commodity prices and for Q4. And here's just some recent publications we've been in. So it's just a few there: International Life Magazine, Global Banking and Finance Review. So that's just a few that we've done more recently. Okay, so that's a little bit about us, guys. So let's crack on and let's go through what the markets are doing right now. So if you turn your attention to gold, so let's just gauge where the price is at the moment currently. So if you want to look at your screens quickly, and we are actually, the current price of gold this morning is $1,696 per ounce and 83 cents. So well, that's changing ever so slightly, but 1,696 this morning. And really, in terms of where we expect the price to be, that is sort of about right for this time of year. And the reason being, just with regard to seasonality, if you want to look at this chart in front of you, this is a 30-year seasonality chart for gold. Okay, so putting everything else aside for the time being, this is just one of a combination of tools you can use for your trading. We're just going to look at seasonality for the time being. What do you see in front of you on the chart has followed very closely this year to traditional seasonality. So you can see the start of the year, January, February, typically they're a bullish month for gold and silver. And this is something to watch out for January 2013 as well, especially with QE3, although you may not see the results just yet in the market. Bear in mind, a lot of hedge funds and institutions aren't trading at the moment, so there's not going to be the big volumes. We tend to see weakness in the early part of the year, in March, April, May, which is a time of year when you get a lot of they say sell in May and go away, but there tends to be more weakness. Coming into the summer months, we tend to get markets consolidate and move sideways with the metals, and really things start to ramp up from about end of July, August onwards, which you can see on the chart very clearly there actually. And this coincides with the gold festivals in Asia, where you've got a number of, well, the wedding season actually, where gold is given as a lot of gifts during this whole period. You've got Eid, Diwali, got a lot of festivals where gold is given. This tends to be more of a bullish season for the metals. So you'll see there that we have followed this path very well this year, probably about an 80–85% match with seasonality to how the price has moved. You can see that we had big moves in August, September. We had a big sell-off in October, which you can see there, which we certainly was something which we capitalized on. And also there you can see where we came down October. We had, that was just the beginning of the month in November. We had non-farm payroll. That's probably been the lowest price we've had over this quarter of gold, and you can see where it bottomed at the beginning of November. We had the quite a big rally in November, 500-point rally there from the bottom. Actually over that, we had over 750-point rally from the bottom in November. And now, as we expected, we'd have a bit of a dip down in December. Now, part of the reason for this is a lot of funds and so on, they are selling positions to end the year, so they're squaring up. So there's quite a lot of profit taking happens this time of year. So we do expect some profit taking in this time of year in December. You can see where we kind of dipped down, especially on gold. We're sitting around about 1700. We certainly this time last year we did go lower, but we didn't go lower until just after Boxing Day. So we had not a lot of volatility really for about a couple of weeks before Christmas, and then bang, after Boxing Day we had some big movement on the markets, a big sell-off in gold. And what you'll see, if there are some funds operating around this time of year, 27th of December, 28th of December, because they're going to be a bigger fish in a smaller pond at that time of year, so they're going to have more effect on the market. So if they buy big contracts in the market, that's going to have more of effect than it would normally, where there's there's going to be more traders who are going to be more funds involved in the market. So it's easier to manipulate a market over that time towards the end of December. But so a lot of traders tend to take this time of year off. They don't trade because you can get some odd anomalies in trading, things which don't normally follow traditional technical analysis. So that can happen. So just as a as just a bit of a warning there to look out for in December. However, we will still have a look and see what live trading setups we've got at the moment and see where we're really looking the price to go over the next couple of weeks. So hopefully that gives you just a little bit of background about gold and what it normally does at this time of year. Obviously, we've just also QE4 has been discussed, and we would expect, based on that news, logic would say that gold would go up. Markets aren't logical though, so you always want to be trading your system, your strategy, keeping good risk to reward. So the price did spike to 1623, however traders took profit at that level instead of buying at that level, so the price has come all the way down to 1700, and we'll talk about that. Okay, so let's just quickly go over the top trades of the week, so using price action trading. So top trades of the week, actually last week, for those of you who are on last week's webinar, I hope you all made a lot of money, because we were looking at that time, obviously we weren't giving any recommendations or advice, but we were having a look at various setups, and gold at that time was coming down to retest that Fibonacci level again, 1688 or thereabouts, that Fibonacci. We came down, we tested it several times, and we saw these sort of hammer candle formations there, very good risk to reward on the trade. So just from last Friday, this was during non-farm payroll, being able to get into that position. where we came down and tested that level. We didn't break it. We had a bit of a knee-jerk reaction in that we came past that fib level, but not much. You know, we're talking about $3 past the level, and then we held, and then we've had a massive rally. So we had several positions on this. So we got out of some positions earlier at 17.12 there, which you can see on the chart there. So 1686 through to 17.12 for 337 pips in total, which was a 50 pip risk actually. So $500 risk if you're trading in lots, and a reward there on trading in lots of 3,370 or profit of that. So for a nice 6-to-1 risk to reward ratio on that particular trade. And in fact, what you can see there, this slide needs updating actually as well. I've just seen that the exit on that price was actually, that was one position that we got out of on the Friday. We've actually had another position that we've held and managed to get out of it at 17.21, which actually represented in the region of about 500 points. So that was yeah, a fantastic trade from last Friday, and you can see there where the price has managed to do a perfect sort of price action trade, Fibonacci to Fibonacci, and traders have all taken profit at that 17.21 level this week. So very profitable trade over from last Friday to this week on gold. Other trade setups we've had, USD Canadian dollar. So as the gold started to make a comeback after non-farm payroll, USDCAD continued to break down. We initially had a false breakdown, if you like. Well, not a false breakdown, but we broke through the fib level. We then came back and retested it. But what you've seen there is support has now become resistance, and we had the right candlestick set up then to go short. And you can see there where we've gone short from that Fibonacci level of 0.9883, and we just come out for 59 points at the next level down, the next price action level. So 15 pip risk, $150 at one lot to make 59 pips at one lot, $590 profit for a nice 4-to-1 risk to reward. So that was earlier on in the week. And then we had pound dollar yesterday, which was quite a nice trade. So that just came up to test a level of resistance, an important fib level, again at 1.6168, and we had the right setup there, good risk to reward, and all the other points that we look at within our strategies. Everything was, all the boxes were ticked, so it was time to go short, and we had from a 15 pip risk, we got caught 60 pips on the trade, so $150 risk there to make 600 profit at one lot. So that was a 4-to-1 risk to reward. So those are really the top trades of the week. We've obviously had a big sell-off on gold after the Federal Reserve announcement this week, and now gold is really hovering around between 1690 to the early 1700s. And we'll have a look at that, and we'll talk about that actually right now. We'll go through some live market analysis. So let's turn to the charts. Let's see what's going on at the moment. Not too much going on in terms of volumes. You can see things are really starting to quiet down on the markets at the moment. So I'm just going to flip over to my screen. If you've got any questions at all, anything you'd like to have a look at, do post it in the chat there, and we will try and cover that as well. Okay, so we've got the chart at the moment of gold in front of us. And here you can see what we were talking about there. So we actually had, this is the important fib level that half 1688, where we came down, tested on payroll. We had a spike down, but it didn't break too significantly. You can see that a direct line doji there, or hammer, very, very much big money coming back into market, and the price getting back up to about 1697 very quickly. So it was very knee-jerk reaction, down and back up again. You can actually see here, this is the trade, basically opportunity to get into the trade on the long side, and you can see here we've actually come out there with at 337 odd points profit through that actual trade, so from start to finish there. And that has certainly been a very profitable trade from last Friday through to more or less Tuesday, well actually Wednesday this week, when we actually finally broke out to that high. Now we did also take profit at two levels, so we took profit as well on the Monday. We had more than one trade running on this, so we took profit at the 1712 level as well, which was because this candlestick formation here is indicating that the price is about to reverse. It's an inverse hammer, and we did actually reverse. We didn't come that low. We came back to 1700s. It was a good time to take profit, but obviously we had a spike later on in the week, and we finally got our ideal exit at 1721. Okay, so now what we've seen is the price has come all the way back down yesterday over the Asian market as well, sold off quite sharply. Again, you can see we've had a nice entry point here just above this fib level around about 1689. Candlestick setup is strong, so we've got this hammer strike, so prices being rejected, buyers are coming in the market. We are actually in these positions at the moment just long, but it's at the moment, it's in the region of about 50-60 points up. Market is it's consolidating at the moment. It hasn't come back down to retest that level currently. So you can see the volumes are really starting to die down now. I mean, we're 11 o'clock in the morning. We haven't seen what you'd typically expect at this time of morning, either buyers to come in strong in the morning or either to sell off, have some sort of move, but we're just moving sideways. So we could continue to move sideways and grind sort of sideways now. We've got this whole range at the moment of gold. So we've got really, throughout the last few weeks, we've just stayed within this about 1680 barrier to the low side, and to the high barrier here is more or less to, I'd say 1723, sort of this whole area here, 1720s up until the late 1720s. So more or less what we're seeing at the moment is you could either be selling short coming down, and then traders are taking profit around the 1700s on the short sell, and then price comes up again, getting in at 1700. Traders take profit around these sort of Fibonacci levels, and you can see they're working very well, these fib levels, as support and resistance really. So I would be looking for the market to really come back and potentially retest these upper fib levels, or if it does come down, to see if that is supported again. So that's really the main sort of trade opportunities at the moment. In terms of major news coming out, there's not massive amount of major news now. Most of it is done. We'll go over that towards the end of the webinar about what major news is to be coming out on this, but that's what we're looking at for gold currently. Obviously you want to be aware if the price comes down to those sort of lower end of the support level here. Just make sure you've got your alerts or something set up there, and if we come back to this higher end as well, likewise you want to be having a look. If you are trading gold quite heavily, those are the two key areas to look at the moment. Financial trade setups right now, what you're looking at is not really perfect in terms of risk to reward. It's okay, but it's not ideal. So obviously we can't give any advice or recommendations on these calls, so that's what I'm going to say about that. Okay, so moving on to silver. Silver's actually broke down more than gold did. So silver's not been to really, we've been testing this 32 sort of 50 area all yesterday. We broke through it ever so slightly yesterday. We've come down. It's a little bit choppy on silver at the moment. Actually, what I will do, I'm going to quickly switch to another screen, and let's bring this across for silver, and we'll just quickly talk through it. Okay, so we're just going to have a quickly look at some moving averages on silver. What you can actually see on silver at the moment, we are below 50-day moving average. We're still above 200-day moving average, but we're just, you can see we've had a bit of a breakdown in price on there. So in terms of silver at the moment, it's very much undecided. It's more bearish at the moment than bullish though, just taking that into account. We've also just broken through that 32.50 level. Okay, so I do expect that on silver, we're going to continue to be fairly rangy at the moment. I'm not really, if you look at the key levels that we've been holding recently, it is that 3160-ish sort of fib level, around about that level, up until the 34s. You can actually draw another fib level around this sort of, I think it's about 34.25 area. It's not a key level in my opinion, but it is another level that you can add to your chart as well if you wished. But really the key levels that we're looking at the moment, you can see this sort of level around the 32 area is being supported. It's not been supported hugely from yesterday's drop. I suspect we're just going to kind of channel sideways at the moment until we get some additional news. We may grind slightly. Actually, yeah, I'll be looking at this market. You can see there's not really much volumes going on at the moment. Let's just get a little bit further out on this market. You could argue that there is a downtrend actually at the moment, so you could have a look here, and if you look here, so silver, yeah, potentially we may get a retest going up to this this upper band, if you like. So if we come back and retest this like 33 Fibonacci level, so we come up to the upside here, we may get to the upper side of this sort of trend that we're seeing. and we may come down again and retest this 31.70 sort of area, and then come up again and then go up for a higher leg come January. January is when I really expect any big movements to start up again, so that's what I'll be looking at the moment on silver. Yeah, that's the main real trend to take into account on silver at the moment. Okay, we're going to just quickly look at the seasonality chart for gold right now. So seasonality wise, yes, you can see we had the typical October sell-off, had the November move to the upside, which we were expecting. December, we had the typical sell-off you get at the beginning of the year, and now market, we're into mid-December at the moment, and we're still kind of back to where the lows of December, if you like. Now again, I would just watch out. You can get some sort of anomalies at this sort of time of year. Certainly last year we did, just in that last week, just before the beginning of the year, we had a sharp sell-off in gold, but that was after the 27th of December. So what you have to account for is at the beginning of the year, when investors are looking to get into positions, it is favourable in a way if gold is starting the year at a lower price, because it will mean investors, hedge funds and so on, if they're getting into gold at the start of the year, it's more likely that the percentage is going to finish higher at the end of the year. So it looks good for everybody's portfolios, and a lot of institutions and funds do tend to take profit towards the end of the year, which can cause weakness in gold and the precious metals at this time of year. Having said that, we've got the whole fiscal cliff situation at the moment, which we didn't have last year, and we've also QE4 has just been announced. So really, we're not trying to play the guessing game here. We will just trade what we see. We'll take good risk to reward on the trades according to our strategies that we trade. We'll take trades if they come, but I'm just looking at pure seasonality at the moment and what we can potentially expect. So here we go. Here's last year. Okay, so take your mind back to last year. What happened? This was December. And this is what we had happen right at the end of the year. Okay, this is the low that we came to in December. We came all the way down to 1550, and then look at this in January. Absolutely staggering move. We came up 2,000 points in January. So you can see first week of January, hedge funds, institutions, they all got into the market, and a big move that we saw. I'm just seeing at the moment, I think, let me just check that we're showing the right monitor, showing screen 2. Okay, I think we may be showing both monitors at the moment. I'm not entirely sure. Guys, if you could just let me know, can you see my seasonality chart at the moment, or are you looking at moving averages? Because both my monitors at the moment are saying they are being shared. If you wouldn't mind quickly letting me know, and I can continue. Seasonality chart, okay, perfect. So we're looking at seasonality chart. Okay, great. So thanks for that, Black Cat. So yes, so what I want to point to is so what we saw at the beginning of January last week, exactly what we've been talking about there. So you can see December last year, here is the big profit taking, here's the sell-off all the way down. Gold moved to the downside over 2,000 points right throughout December. So we had a big move on the downside to December. So the Santa rally is, when people talk about the Santa rally or the Christmas rally, this is more looking at the stock market. This is typically something which happens from Thanksgiving through to beginning of the year. It's not necessarily applicable to gold and silver though. We don't see that necessarily occur. In fact, we can see December, and then January is a big month on the bullish side. So January certainly one to look into. You know, maybe that you want to get into longer term positions at the moment in terms of getting out of those later in January. That's something which you may consider. Obviously, if you have your own strategy, you can apply to that. But that's seasonality for you guys. So that is, we could potentially, anything can happen obviously, but we could potentially have a further downside, we could have further upside. But last year when we did have that further significant sell-off, it didn't happen till after Boxing Day. Okay, so it was during that week after Boxing Day, that's when we saw the big sell-off. So just be careful if you're loading up now thinking it's the best price possible on gold. Might not be. So just bear in mind that. Okay, so let's have a look at the commodity currencies and see what they are doing. Okay, so USD Canadian dollar, you can see here was sold short. We had a nice sell short down here. This was our sell short position. Now we've actually held this fib level as nice support here to this is around about, was it 0 point? My screen is just hiding that ever so slightly, but you can see that hopefully on my Actually, if I click here, it's going to give me the price. 0.98251. You can see we've had a bit of a bounce up there. We've bounced up to about 20 points at the moment on USD Canadian dollar. So that seems to be supported at the moment. So if we continue to bounce up there, we could get a retest of the fib level 0.98832 at the moment. So that's something that USDCAD may be doing if we continue to get a bit of weakness in silver. We could see USDCAD come up and retest these levels. Likewise, if we start to see gold and silver to rally back and the US index starts to sell off, we could see just a retest of this level and possibly a break. Okay, so USDCAD, that's been really, as the main sort of trade there over the last week has been the sell short until Wednesday, more or less. Okay, so we're looking at New Zealand US dollar. US dollar has had a big move. It broke out of a key fib level here. You can see retesting broke out, and we've had quite a nice move up there. So we've almost come up to just shy of 0.84641 fib level or thereabouts. And you can see there's probably been some ticking there. Price has come down. It's about 53 points down. It got just shy of that fib level, not much, about 7 or 8 points shy of that fib level. Now we're seeing the price is starting to come down in New Zealand US dollar, so we may now retest previous level of resistance here. Of the previous resistance may become support. We'll have to see what happens on that one, but certainly we're getting some weakness there today. And we'll have a look at Australian US dollar. So Australian US dollar, wow, that's nice. We were looking at this yesterday. Actually, you can see we've had quite a bit of resistance here for this fib level. Seeing some support, so we're looking at what's that fib level? That is about 1.0586. We have had a nice bounce on there. We'll come again, but we had a nice bounce on that. So about to the tune of about 50 points off that fib. That was actually pretty precise. You can imagine the stop just recorded on this is pretty tight. I mean. This was pretty tight precision on that trade. You could have had 5-6 points. We wouldn't go in that tight, in all honesty, because obviously you have to pay part of the spread and so on. But in reality, you'd be looking at about minimum about 10-point stop. But that did bounce off with pinpoint accuracy, and we've come back to we've had a nice candlestick set up there. And if you look at some other if you look at the other indicators we're looking at to take this trade, that's been a nice trade to the upside. Okay, so we're just getting, okay, that's fine. Just coming on towards 11:30, guys, so mindful of the time. Before we switch on, we're going to start looking at the news coming up next week. Let us know if there are any other questions at all, guys, before we switch off from the charts. So I'll just give you guys just a minute or so. Let's have a look. Okay, fantastic. All clear. Okay, brilliant. Good stuff, guys. Let's crack on. So we will move on to look at the news coming up next week. Okay, so the week ahead, really, guys. So there's not too much which is going to be happening, to be honest, over the next week. News is going to start to die out. There is some news which will affect the commodity currencies and the US dollar, but nothing too major. So the main news announcements we've got next Tuesday, we've got 12 AM, we have New Zealand dollar news announcement, which is the ANZ business confidence. We've got monetary policy minutes from Australia, so affecting the Australian US dollar. Next Wednesday, we have the 9 AM, we've got Euro German IFO business climate. These are all the major news announcements. If you go onto any website with the economic calendar, these are all the ones which are highlighted in red, if you like. So there may be some other news announcements which aren't as major, but these are the major ones coming out next week. So we've got next Wednesday, 9:45, we've got New Zealand dollar GDP, which will affect New Zealand dollar. Next Thursday, we've got CAD core retail sales, so you could have an effect on USD CAD. We've got next Thursday, 3 o'clock, existing home sales and fully fed manufacturing index. That could cause some volatility actually for gold and silver next Thursday. But again, it depends. There's going to be a lot of traders who are not trading now, or certainly institutional traders who are going to be off. Next Thursday, 1:30 p.m, we've got the USD unemployment claims, and then next Friday, the 21st of December, we have CAD core CPI and CAD GDP. So we're not expecting it's going to be a hugely volatile week. Next week we'll certainly see the volume start to die down next week, but we are going to be taking advantage certainly of range-bound trading over that period, which is very profitable. But guys, if you'd like to get more information, obviously we're just kind of touching the surface on strategies today. This is just going through some very basic elements of a much more detailed strategy for price action. But if you'd like to learn to trade our 5 core strategies we utilize at the Gold and Silver Club, you can of course apply via our website. That's very simply going to our website, www.thegoldandsilverclub.com. Just click on Learn to Trade. There's actually an application there, so you can fill in the application, and then the Gold and Silver Club will be in touch with you and follow up on that. If you want to get in contact, you've got any questions at all, anything you'd like to go through, you can call us either on our UK number there or our Asia number, both available or open at the moment to call. So Asia, for those calling from Asia at the moment, it's 852-8191-0403. If you want to call our UK office, that's 0207-193-0403. And also, of course, you are more than welcome, and I would encourage you also to subscribe to our newsletter. So that's just at thegoldandsilverclub.com. You receive a free weekly newsletter on gold, silver, commodity currency news, and also it gives updates on live market analysis and prices. So do make sure you subscribe to our newsletter there as well.